Here's the biggest mistake that everyone is making out there right now and how you can take advantage of it. My name is Sean Price. I'm with eXp Realty here in the Price and Price Group. And the mistake that I see everybody making right now is everybody is following the herd. So what does that mean? I'm going to go into depth in what that means, and I'm going to go into depth in what you can do about it. And I'm going to give you evidence to show what you can do and how you can take advantage of the current market. First of all, this is our weekly market report where we review what's happening in the Northern Virginia market for the last 7 days. And I'd like to apologize for my dress and for being late with this week's market report. It was a crazy day yesterday. Didn't get a chance to shoot the market, so it is 4:45 in the morning, and I'm up trying to get this market report shot and out to you guys so you have all this information. All right, so the biggest mistake that I see people making is they are following the herd. They followed the herd when the everybody was buying and it was crazy out there, and therefore they were having to bid and having to compete for multiple offers. And they were having to give up all of their contingencies. I don't think that these were mistakes with regards to buying real estate, because a lot of people that bought see a lot of appreciation in their properties. But I think that when you're following the herd and you're going where the crowds are, you're not going to get a deal. You're going to pay retail. You're going to pay market value for things. And right now, the herd is holding back. I have a lot of buyers that are sitting on the sidelines right now waiting for interest rates to calm down, quote unquote, waiting for prices to come down, quote unquote. And they're sitting on the sidelines, and right now they're missing opportunities, because as you're going to see when we go through this market report, you're going to see that the days on market are increasing. You're going to see that that the number of inventory, the inventory is decreasing. You're going to see that the actual market activity is really shrinking right now, which means that there's a big opportunity for buyers and for sellers. So we're going to get into the depths of that, but a couple things to consider if you're one of the people, either a buyer or a seller that's sitting on the sideline. Number one is we are in the fall season, which means that if there is someone that has their property on the market right now, their property is on the market because they need to sell. They need to sell that property because if they had the time to wait, they would probably wait for the spring market. They would probably wait for the spring and summer when there's obviously a lot of activity, right? Where there are more buyers out there. So the people that are selling right now, they're selling because they need to sell. So for buyers, when you see that days on market have almost doubled, and you see that properties are sitting, and you have that combination with sellers that are out there that need to sell right now, you got some opportunity there to get in there and negotiate a fair price to get all of your contingencies included, so you know what you're buying. From a seller's perspective, there's not much inventory. You're going to see that when we go through this market report. So if you're considering selling, I highly encourage you to consider selling right now versus waiting until the spring when everybody's going to be selling, because then you have all of the competition. Also, by the same logic that the sellers that are on the market right now have to sell, the buyers that are on the market right now, they need to buy, because they are not necessarily rushing to get moved before school. They're not rushing to beat the general motivations of people that make them buy in the spring and the summer. They're buying now for personal reasons. So these buyers that are out here looking right now, there's a lot less of them, but they are very serious buyers. So sellers, it's a great time to sell. You got the buyers, you have very little competition. If you get your property in good condition and you price it right, or you price it right for the condition, it will sell quickly, it will get multiple offers, and you will get the full value for your property. Okay, buyers, again, those properties that are not priced appropriately, which there are a lot of them on the market, they're sitting, and it's an opportunity for you. Okay, so that's opportunity number one. Opportunity number two, if you think about it, there's always a pullback when things change. When COVID hit, there was like a 6-week pullback when everybody thought the world was falling and everybody pulled back. After that, the market went absolutely crazy. Interest rates are doing the same thing. We're seeing a pullback with the interest rates. So when the interest rates are going up, buyers are pulling back because they're saying they want to see the interest rates calm down. Okay, that pullback will end when this normalizes. It always does. When that ends, the opportunity for buyers is going to be much less of an opportunity. The rates themselves may continue to go up a little bit before they come down. So as a buyer, you may want to buy now so you're not getting such a high interest rate. And as a seller, you may want to get in now while there's before the interest rate goes up and buyer demand pulls back, or buyer buying power pulls back even further. If the buyer pullback continues if buyer power and buying or interest rates keep being an issue and it starts pulling back even more over the next month or two, then what's going to end up happening is when we get to the spring, most sources say that we're going to settle in at about 4 to 4.5% in 2023, probably spring or summer of 2023. So when that happens, number one, it's going to become normal, and that 4.5% is going to look a lot better than 7%. So buyers are going to flood the market again, and you're going to see that inventory start to really increase. So if you buy now and you get it at a better price, then when the interest rates come down in a few months, you've already locked in the property. You got the property at a good price. When the interest rates come down, refinance it, and now you've got the lower mortgage. But you got the property at a good price versus waiting until the spring when everybody was on the market and you had to pay a higher premium for the property. Okay, so that will happen. We will come out of this season and we will see the market increase again. So now is an opportunity. Now is a window. And again, you can buy now and refi for sellers. Right now, you have the buyers that are out there. They're looking. If you price the property appropriately, you'll get that demand. We just put a property under contract that had multiple offers. The buyers are still out there. And you do have that opportunity because, as you're going to see, inventory is so low right now, and it will pick up come spring. So do you want to wait until spring and compete with the influx of property, or you want to go ahead and take advantage now? So that's what those are the windows I see. So let's get into the market. Let's get into the market report. Today I'm going to go over not only the part one, I'm going to go over the last 7 days, but then part two, I'm going to go into what's happened September month over month this year versus last year. Okay. All right. So let's dive into the numbers. All right. As always, our orange line is buyer activity, and you can see buyer activity was up 13% over the last 7 days. And as always, the blue line is inventory. Inventory is down 15%. Sorry about that. I need my coffee. So you can see that the blue line has been sitting significantly higher than the orange line, which that's what puts us into a buyer's market because inventory was higher than buyer activity. You can see last week that the two came closer together. So what does that mean? In the buyer's market versus the seller's market, you'll see that what happens is we had gone down into a pretty stiff buyer's market, and then last week we came back up towards a more normal market. So we'll see what happens with this trend as we continue to move through. We may end up going up a little bit. We may start stabilizing here at more of a normal market. Okay, so that's the last 7 days. Now, what happened in September, month over month, 2021 versus 2022? All right, so new listings this last September, 229 listings. New listings in September of 2021, 429. So that is a significant difference. It's almost half of the number of inventory or properties that came onto the market. So this is where the opportunity is for sellers. There is no activity out there as far as competition. And we've had buyers that have been looking for months that cannot find a property because the good properties are coming on and going quickly with multiple offers. And those that are sitting are the ones that have been either overpriced or their price doesn't match the condition. So there's an opportunity to get out there as a seller and get your property on the market, have them respond quickly, and get your full price offer for the property. Give me a call about that. I'll show you how to do it. Okay. Number of sales. So we can see, excuse me, in September of 2022, we had a drop from August of 304 down to 140. Compared to September 2021, 289. So that's less than half the number of sales. So certainly a decrease in market activity. You can see that this drop here is pretty significant. You can see the same thing happened last year. Even when the market was going crazy, there was a significant drop there. So it's typical to see a drop in the number of sales in September compared to August. But again, this was half of what it was last year. So certainly a drop in market activity. So here's where it starts getting really interesting. Days on market. This is the opportunity for buyers, and this is where sellers really need to pay attention. So For buyers, the average days on market went from 28 in August to 55 in September. So what that means is properties are obviously sitting longer. Now you would expect with a number like 55, like the almost doubling of the days on market, that there would be a lot of properties that have come off the market and expired. The fact of the matter is, this September versus last September, even with the number of listings being so far decreased, the number of expirations have decreased significantly. So the properties are not, we're not seeing a large increase in expired listings, but we are seeing properties sit on the market longer. So what that means is basically the sellers, and this is where sellers need to pay attention, the sellers that are putting their property on the market and pricing it based on 6 months ago are sitting on the market longer until they realize that the market is not going to pay that increased value, and they start decreasing their price. That's why we're seeing a decreased sale to list ratio, decreasing their price closer to market value. Once they get it closer to market value, the properties are selling. But this is the opportunity for buyers, because when that property sits a little bit longer, you have negotiating power. You can get all of your contingencies in there. You can actually get the property at a fair price based on the condition. And some buyers are getting opportunities where they're getting a decreased price, but for the most part, properties are selling at market value. So this is certainly causing appreciation to flatline. And it's bringing the market back into a more normal place, and it's kind of changing the whole dynamic of the multiple offers, causing that crazy appreciation we've seen over the last few years. So buyers, you're able to get a property for a reasonable price. Sellers, if you price it right and your condition is right, and I know I'm repeating this over and over again, but you're able to recapture that appreciation that you got over the last 2 years. Okay, so days on market is up to 55. Now, this is not an unheard of days on market. It's just a significant increase over August. If you look in September of 2021, it was at 34, and then as the winter came on, it went 42 and 55. So it hovered in the 50s here in November, December. January was actually at 74, and then it started coming back down again. So we will probably see this number go up. We'll probably see ourselves higher than 74 as we go through the winter. So we're going to see these numbers increasing, but they will likely come back down again in the spring, especially if the interest rates start to correct once they get inflation under control. So months of inventory. So here's excuse me, an interesting statistic as well. 5 to 6 months of inventory is considered a nice normal market. Anything below 5 to 6 months is considered a seller's market. Anything above is considered a buyer's market. So I know that I showed you previously the 7-day market report showing that we had dipped pretty significantly into the buyer's market. That is a short-term, more acute, give you an idea of what's going on right now so you can make decisions in the right now. What we're looking at here is kind of a historical over the month of September, so it's lagging information. So you'll see that based on the fact that 5 to 6 months is considered a normal market, anything below is a seller's market, anything above is a buyer's market. So we're still into that seller's market based on these statistics, and you can see that 4 months is not abnormal. We were seeing that in September of last year, October of last year, January and February, and then we got into the 3s and then the 2s. So this is increasing, whether it's a normal, actually, I'm sorry, September of 2021 was 5 months. So it is increasing, but it is still less than. And this is because the inventory is so low. This is where the seller opportunity comes in. Median sales price. So something to keep in mind on median sales price. When you have, I'm going to keep the numbers simple here so that we can see this. So let's say that we had 15 homes that sold in the month of September, and they sold at a certain price. So you put those homes in order, bottom price here, top price here. The 8th property, no matter what that value was, would be the median sales price. So this is our buyer pool of properties that had sold. When you increase the interest rates, you decrease buying power. So somebody who was looking at a $500,000 house 6 months ago is now looking at a $350,000 house. So you're going to see median sales price affected by the increase in interest rates, because that pool, the buyers can't buy as much, so they have to lower it. So assuming that as a group buying power has decreased, you're going to see a decrease in median sales price because they can't afford as expensive of a house. That doesn't mean that the value of that $500,000 house went down to 350,000. It just means that the buyers, instead of buying at 500,000, now have to go and buy at 350,000. So median sales price can be an indicator in decreasing home values, but it doesn't always correlate specifically with decreasing home values. So, for example, you'll see this September we were at 970. Last September we were at 1 million. So that's a $30,000 decrease. What's that, up like a 0.03%? And my math could be off on that. That doesn't mean that home values came down 0.03% compared to September of last year. It means that buyers were buying at that price point. To see if home values have come down, we need to look at specific markets, specific homes, specific neighborhoods to see, are those values going down, are they flatlining, or are they going up? For the most part, right now they're flatlining. Are they going to go down? Nobody knows. Are they going to go back up? Nobody knows. But I know that right now there's an opportunity for buyers to get a property at a reasonable price. If we get through this winter and this reasonable opportunity stays here, and then we start spiking again in the spring when everything normalizes, buyers are going to have missed an opportunity. If prices go down a little bit, even over the next several months, and buyers buy a little bit higher than they could have even 3 or 4 months from now, those prices are probably going down because interest rates are going up. So buying power is going to be decreasing. So you don't, when the conditions are perfect, this is what all the buyers are waiting for. When the conditions are perfect, all these buyers are going to flood back on the market again. So, and then it's going to be too expensive because everybody's buying and bidding up. So buyers, you just really have to not follow the herd. Sellers, same thing. The sellers are thinking the same thing. A lot of sellers are thinking we're going to wait until the spring when interest rates have calmed down so that the market is crazy, but then you're going to be competing against all these other houses. Whereas right now, you might have an opportunity. There's a lot less competition. If you do price your property appropriately, you're going to sell it quickly and you're going to get to recapture that equity. All right, and I know I keep hitting those points, and I'm so sorry, but it's just really important. I see a lot of buyers making mistakes and sellers making mistakes by holding off right now, in my opinion. Again, I'm not a financial advisor, but this is my opinion. This is what I've seen in the market, and this is what I see happening out there. Okay, so here's an interesting stat that we haven't gone over in the previous market reports. This is list to sale price ratio. So houses that, let's say it was listed for 100,000, what did it sell for, and what's that ratio? If it sold for 102,000, then it sold for 102%. If it sold for 99,000, it sold for 99%. Okay. Again, this doesn't indicate market value, but this does indicate, are there price reductions happening? And we are seeing price reductions happening. And that's because sellers are still overpricing and buyers are not paying above market value for homes. So that's why we see this number. We do want to keep an eye on this, because if we see sellers getting more in line with what the market values are of property over the next few months, and this number keeps on decreasing, then that would indicate that prices are in fact dropping. So we're going to keep an eye on this number over the next several months. All right, and just a little historical information. Again, you can't predict the future. Nobody knows what's going to happen. Nobody knows what's going to happen with the interest rates, with inflation, with everything that's happening. It's kind of a crazy world right now. But we can look at what's happened historically and have that kind of be a guide for us. So the blue line here are fixed rate mortgage averages. And then the orangish line here is the median home prices. So you can see that when interest rates have been really, really high, prices kind of flatlined a little bit, but they still had a general trend up. In fact, regardless of what's happening with the interest rate, down, up, home prices on average have continued to appreciate. This is why real estate is such a good investment. There were dips in here, don't get me wrong. There were times when housing prices dropped, but then they would recover. And as a general trend, they continued upwards. So the only time that we see a major drop in housing prices was between 2007 and 2010, and that's when we had the subprime mortgage crisis, and that's when the real estate market actually caused the recession because of all the bad lending practices that were going on. Those have been correct. The lending that is out there right now is solid. So this is the only time we've seen a significant price drop over a long period of time. So that is with relation to interest rates, and also with you take into account recessions. So I'm not an economist, but I went through and did some research on when did recessions occur. And you'll see in the 80s there was a recession and home prices generally trended up. In the 90s there was a recession and home prices, they kind of flatlined there, but then they started trending back up again. 2000s there was a recession, home prices continued to trend up. 2007 to 2009, that's when prices came down. Again, that was the subprime lending crisis, the housing bubble. And then 2020, this was the COVID, when the COVID situation first started, we had a quick recession there. Housing prices continued up. So you can see there's not really a period where housing prices have made this significant drop except for 2008 or 2007 to 2009. So just keep that in mind as you're sitting back, as you're considering what we've talked about in this video, and as you're considering the numbers, because that's the beautiful thing about real estate is it is a logical game and it's all based on numbers. There is some guesswork. Nobody can predict the future. I've seen reports of that they expect housing to drop 10 to 20%. What's going to happen? We don't know. We'll see. But I know that this market is different, so we're going to watch, and nationwide stats don't equal Northern Virginia stats, so keep that in mind as well. Okay, please like and share the video. If you have any questions, please feel free to reach out to us. I'd love to talk to you about your situation individually, and we will see you on next week's video. Have a great week.